Welcome to the General Budget Concept section of Budgeting 101 FIU's Budget Basics. Let's begin with the concept of budget authority. How is budget authority established? Well, that depends on the type of funds. For general funds, which are your E&G funds, budget authority to spend will be based on state appropriations, while for self-supporting funds, which are your auxiliary enterprises and contracts and grants, your authority to spend will be based on estimated revenues you anticipate to earn. Approaches to budgeting. There are many. Here we're going to address two, a traditional and an alternative approach. For our general funds or our E&G funds, we use a traditional approach called incremental budgeting. This is your previous year's budget adjusted for legislation, actions, recurring and non-recurring, and also adjustments for incremental investments. For our self-supporting funds, we use an alternative approach called zero-based budgeting, and this budget process begins from the ground up every year. The university can be compared to a large business in the private sector. It has multiple sources of income and many types of expenses associated with its operations. Examples of sources of income or revenue inflows include tuition from student, federal, state appropriations, and grants. The university also earns income from its auxiliary enterprises, the foundation, other state and local agencies. On the other side of the coin, like any business, the university has expenses to pay. The single largest categories of expenses is associated with paying the faculty and the staff to operate the business. Other expenses or operating expenses include those for operating the university, such as utility, maintenance, and repairs. The university must also pay for supplies, travel, rental of equipment, debt service, and insurance. Given the complex nature of our business, extensive sources of revenues, and multiple lines of expenses, the university must have a strategy for managing those resources. You cannot assume the revenues and expenses will line up exactly and flow so everybody's needs will be met as they arise. There must be some sort of plan, and this plan is called the budget. Now, these are some budgetary accounts category used here at FIU. Let's begin with revenues. These are the sale of goods, your rental income, sponsorship revenue. Now, for E&G funds, most departments will not have revenues. Salaries and benefits. This is the cost associated with the employment of faculty, administrative, and support personnel and benefits. OPS. Temporary employment, student assistant, adjunct faculty, etc. are paid out of this category. Now, operating expenses. This is the bulk of your variable office expenses. This category includes items such as travel, printing, office supplies, software, and general office items. And lastly, OGO. These are where assets and equipment greater than or equal to 1,000 when purchased are recorded. Consistency is the key. If you have trouble assigning an account to a particular expense, just make sure all occurrences of that expense fall in the same account. This concludes the General Budget Concept section of Budgeting 101, FIU's Budget Basics. Next is the budget process.